All right, everyone. Welcome back to the Gateway Center Conference Auditorium. So we are about to enter kind of the final segment of the 2023 conference. And so right now we are going to, we spent a lot of time hearing from research today and yesterday by design, right? Research is looking at phenomena that happened in the past. In that first session yesterday, a very, very recent past, but even that last panel, right? We were looking at some very recent events and some very unique data sets. And even in our second research session as well, right? So the timing is obviously very, very relevant, but just by design, we're looking at events that happened in the past. And now, our panel discussion today allows us to look ahead, right? So we're going to reflect on what we've learned, reflect on what we've heard, and also just tap into the expertise of some of the folks you've seen already. Our three community bank discussants are reassembled now together at the front of the room. They are joined by Kia Haslett, the banking and fintech editor from Bank Director. And this session is going to be moderated by Brian Sullivan from the FDIC, host of the FDIC podcast. And I understand that the intention is to re-release this at some point as an official FDIC podcast. So with that, I will turn it over to Brian, who is going to lead a discussion on how community banks are preparing for continued success. Thank you, Brian.
Jim, thank you so much. It is a delight to be back here now for the third year. Hey, before we get going, fun fact about Jim Fuchs. He plays the ukulele and the banjo. Who knew? This is what we learned last night. Jim, again, it is a great pleasure. Again, third year that we have saddled up a number of our community bankers to discuss the future of commercial real estate. Last year, it was the future of relationship lending in the digital age. And this year's theme, how are community banks preparing for continued success? As we all know, community banks have always been successful based upon their physical presence, their deep roots in the communities and the customers they serve. But let's face it, this past year has reminded us that success is by no means a guarantee. The bank failures of last March and April, I think, laid bare some of the risks that others at this conference have discussed, interest rate risk, credit risk, climate-related financial risks, and even the role social media can play in fueling how markets behave. So today we're pleased to welcome and to reintroduce to you all a number of community bankers, very diverse group of community bankers with different stories to tell, different approaches to banking. To my immediate right, of course, you know Andy Anderson, President and CEO of Bank of Anguilla. Brenda Foster from Wynot Minot, North Dakota at First Western Bank and Trust. Skip Hagebeck from City National Bank and City Holding Company out of South Charleston, West Virginia. And somebody you may not know, Kia Haslett, banking and fintech editor of Bank Director. Our journalist here and will be offering some color commentary as we go along. So welcome to you all. And Andy, to begin with you, we're just going to go around the horn and reintroduce ourselves a little bit and tell us about Bank of Anguilla and how you've defined success over the years.
Sure. And good morning. I apologize. I usually don't sound like a frog, but Paula will do that to you sometimes. But we're a $195 million bank in the South Delta of Mississippi. We're very rural, population less than 5,000 in our two counties that we serve, and we're only in those two counties. I've been blessed. I've worked there. I'm going on my 41st year right now. We have a board of directors that we're not family owned. We have a board of directors that is committed to our bank, very smart, and committed to our community. And we are a mission-focused bank because we serve two persistent poverty counties, and that's where we do most of our business. And our directors are committed to that. And so, my definition of success is keeping our community alive. because that is, and our bank alive, of course, but keeping our community alive, because without us, it would not be there. It would not be there, and I can guarantee you that it wouldn't. And we, 27% of our loans are for original balances of $5,000 or less. 12% are $2,500 or less, and we don't charge closing fees for those. And so the people of our county need us, and it can be hard. I often think how wonderful it would be to wake up in the mornings and be serving a bank in a metropolitan area with the Walmart or clothing stores, the movie theaters, and I wouldn't have to worry about keeping our rural hospital alive or keeping our school alive and all that. But that's what we do, and that's my definition of success.
That's a good one. Let's head up north. Brenda, your First Western Bank and Trust got its start in the 1960s.
Correct.
And you've grown to, what is it now, 18 branch locations in 3 states. What's worked well for you? And do you expect this success model that you've embarked upon to continue?
I guess what has worked well, and I spoke to this earlier today, is being a partner with the communities that we're in, not only, financially, but through volunteer hours as well. We work side by side with each community that we're in. In fact, this week, every one of our employees has the opportunity to volunteer in either a soup kitchen or cleaning up the parks, or we have a laundry list of opportunities for our employees to participate in. So I'll be doing that tomorrow when I get back. And so success really is being that partner, making sure our communities are thriving and have what they need, listening to their concerns, and working side by side, not only in successful times, but challenging times as well. If somebody is having a challenge, we want to be there to help them out. If they're having success, we want to be there to celebrate that. And I think over our almost 60 years, we have done that, and it's being recognized. Now, some of the communities that we're in now are fairly new to us, but the employees that work there are community members, and they have that same thought process. And as we have acquired or merged, that has been a very important component to the sellers of those particular banks, is that we are good to their employees, good to the communities, and that really is what we're about.
Skip, now to you. Your bank is located, as I understand, smack dab in the middle of Appalachia. And unlike maybe Andy's Bank of Anguilla, you have very nearly 100 branches and spread across 4 states, total assets of about $6 billion. How do you define success?
We've always defined a success on 3 pillars. One's financial, and we're not embarrassed to be financially successful. The core reasons or drivers of profitability are going to be growing, and when we think about growth, we think about households. So if I walk into a branch, I don't say, what are your deposits today? I say, how many households bank here? We have about 200,000 households over about 100 branches, so about 2,000 households per branch. That's about 60, 70% more than the average bank in America. So that just makes you profitable. Then we focus on loan growth. The other 2 pillars would be customer service. We're really proud to be really good at customer service. J.D. Power has 4 times in the last 6 years called us the highest performing bank in the North Central region. When we're not the highest, we're right below them. So we know we do a great job for our customers. And then community involvement throughout each of the communities in a very decentralized way is the 3rd pillar that we survive on.
And now to you, Kia, as a reporter yourself, I imagine that bank directors either want to talk to you or don't want to talk to you, both at the same time. Whether on the record or off the record, what's your sense of the bank directors that you speak to? Is their mood positive in the wake of everything that we've been through this year?
Yeah, so Bank Director is a pretty interesting publication. I don't know if I confused anyone with the title of it. I work for a publication called Bank Director, so our primary audience are bank directors and bank executives. While those two groups often work together on boards, they have different understandings of banking. And so I like to think about how can I bring bank directors up to speed, both with understanding the mechanics of banking and then also some of the macroeconomic trends that impact their banks. Now, we have a variety of banks up here. There's 4,200 banks in the country. I try to speak to bankers broadly without getting too specific about any one type of bank or one type of business model. I think right now, many bank directors maybe have lived through the savings and loan crisis but weren't in charge of a bank during the savings and loan crisis and are kind of exploring some of their options for ongoing decision making. So, from a financial perspective, what should I do about, our earnings outlook? But then also from an investment perspective, where should we be putting our dollars, both in technology or physical branches or in different skill sets within the bank so that we're set up for the next, decade of success. And I also want, every bank to feel like they are empowered to make the right financial decision for them and their shareholders. Right now, that actually does, for a segment of banks look like selling. For a segment of banks, that looks like buying. For some banks, that might, there was a mention earlier about de novos. So what does the banking landscape look like as far as big banks and small banks and the direction of growth in this industry and consolidation? So that's kind of where, I think they are risk on, and they are very engaged when they feel like they need to kind of really understand what the environment looks like right now.
Well, now I think we should all talk about just a little bit. I don't want to dwell, but everything that we've been through, yes, in March and April, there may be this inherent tension between how things have always been done or how you've always succeeded and how you might succeed in the future and innovation. Let me ask each of you, did you feel like what happened to those three banks did it tell you anything about your own bank? And golly, let's mix it up a bit. Skip, we'll begin with you. Did you see any of yourself in any of that or no?
No, I was glad not to see myself in that. It reinforced what makes Citi a really strong, unique bank, which is that tremendous household concentration that we have. We have the strength in terms of the retail household count of a Chase or a B of A. If you look at our debit card revenues, we have $30 million of debit card revenue. That would be more than twice what the typical bank, a $6 billion bank, would have, and it's on par with Chase, that whenever they went into acquisitions in the 80s and 90s, they bought the best banks in town. Why would they buy the worst? They always bought the strongest, deepest franchises. We have a franchise like that, and so our uninsured deposits are 15%. We would know all of those customers well, so we didn't see that. I did, as I mentioned yesterday on social media, I did realize with the social media, I've always told our regulators, look, we don't need asset side liquidity. We'll just borrow the money. We don't borrow from the home loan at all. So we can do that. Now they've been saying, no, you need to have some asset side liquidity. I'm with them now. I think you do have it. And that's a change, I think, for the new environment has brought.
Brenda, were there any lessons that you learned from earlier in the year that you might apply to your own bank?
Well, I think we had some positive lessons that many of the things that we're already doing are the right things to do, and we don't bank the wrong types of industries. But similar to you, Skip, we had 15% uninsured deposits, and sometimes you forget about those things, and that's really important. It presented an opportunity for us to make sure we were calling our larger depositors and answering any questions. So the first thing you think of, okay, how's this going to impact you? And so we did have a very robust reach out to our deposit base, and some of them said, why are you calling me? And so it just reinforced that the things that we've been doing are the right things to do. but we also took it as an opportunity to have further discussions with our customers.
Right.
So,
You mentioned just being reminded of things that you may have already known, but maybe didn't think about for some time. I know that for FDIC, our customer response line, we have a toll-free number that people can call, and our phones were ringing off the hook. People asking about deposit insurance, something that under normal circumstances they wouldn't even consider. So let me ask you a variation of this same question, Andy, because yours is a small bank serving a really poor area of the Mississippi Delta region. We've been talking about climate-related financial risks, and so the events that have happened to your hometown and to your customers since the epic flood of 2019 that you told us about, and then that monster tornado that took every small business off of your main street. How have you positioned yourself for success? What does success look like in an environment like that?
Sure. Excuse me, and just to deviate just a second and educate the audience and Skip too, we're the real B of A, Bank of Anguilla, so I just want y'all to know that. We faced a lot of disasters through the years, as I said yesterday, so we're no strangers to that. We have worked through several floods, and of course, one thing that we didn't bring out, we had a tornado in Anguilla in December of this past year, and I was in D.C. at an American Bankers Association meeting and had to leave early, and it went right by the bank, and the bank had damage. We lost some lives in Anguilla, and 3 months later, 4 miles up the road where I live, we had another major tornado. So we're no stranger to that, and as I said yesterday, when you're a small community bank, you have to have not just a bank disaster plan, but a community disaster plan. So when these disasters happened, I think a lot of the success, we measure success on how well we can help the community, how well we can keep it functioning, how well we can bring it up and do things like that. Do you want me to get into our 501c?
Please.
Okay, so just very briefly, and I mentioned this briefly yesterday, and I've talked with some people. As I said, our counties are very poor, extremely poor. And over 60% of Rolling Fork was renters. They have no place to come back to. Our landlords will not rebuild. There was some government housing. I don't think it will rebuild because they're still sitting there destroyed. So 7 of us formed a 501c3 that anybody in this room is welcome to donate to, by the way. And we're bringing renters back into our community as homeowners. It's a complicated process, but it's one that we hope will work. And we actually had 2 people from D.C. come down from FEMA last week because they would like to see this as a model for other places to see. They said it sounds too good to be true, but we're bringing them in as homeowners. We're purchasing vacant lots where there used to be houses for people that aren't coming back. We've purchased enough lots now to build 60 homes. These renters that have never owned a home before, they're all poor, will come back. We're building them the homes. They will have a 20-year 0% mortgage, paying about $500 a month, and the house will be theirs completely in 20 years. And to qualify, of course, they had to have lived in Rolling Fork where they lived was destroyed. They go through 2 financial literacy classes that us and 2 other banks are providing, home ownership class, a mental counseling with a mental counselor because there's a lot of post-traumatic syndromes on that. And then a couple of other classes, a HOPE class and different things. And we've got a charity that designates who gets the first homes once they qualify. We've had 19 go through the class, then we had another 13. It's been very successful, and we started building our first 3 homes last week. We've got another 3 ready to go, but this is bringing people that's never owned a home back to Rolling Fork, and they will be homeowners. And these people have never owned a home before. So this is a good program. It's called Rolling Forward Build Back Better. You can see it on the internet. Just go online. And we've got some lofty goals. But in our county, this is one good thing that will come out of disasters, that we're going to make some people that never owned a home before into homeowners. And these are 1,200 to 1,400 square feet homes, 3 bedroom, 2 baths, fully furnished. And it's going to be good.
Wow. All the success in the world on that. Kia, again, you talk to a lot of bank directors and board members. The survey that came out of this conference, among a lot of community bankers, they point to the traditional sort of risk areas that they focus on, net interest margins and the higher cost of deposits and the adoption of very expensive technology.
Yep.
What are they telling you? Are they talking at all about climate-related financial risks, or where's their heart?
Yeah. Bank Director also runs, we do about 4 surveys a year. So last night I just quickly refreshed myself on those surveys. ESG, environmental, social, and governance, risks are very, very low for most of our community banks. ESG initiatives are seen as being a driver for the public banks, maybe because of some of the investors that are in those banks, or they are SEC registrants. Outside of that group of banks, we don't see it being discussed a lot, which I think is always kind of a missed opportunity, because governance is the G in ESG, and I think banking as an industry has maybe some of the best governance practices that came out of the great financial crisis. And so, but I do think and I will say, there's, I think, an ideological or political opposition to acknowledging the importance of ESG within maybe some of the board level, some of the individual directors. Where I think about ESG as, I think it's actually a real opportunity for a bank to really think about the role they play in the community, right? The sustainability doesn't just have to be from an environmental point of view. It can be about having a really great workforce. It can be about supporting really healthy communities and investing in those communities for long-term success. And then environmental, I've always, the way that's looking in community banks is a lot of environmental initiatives that help save money, but it also looks like in funding and being involved in solar and wind projects from an investment perspective. So I actually do think that there are some banks that are really curious and interested in how they can be involved in some of maybe the climate transition opportunities. When we think about climate risk, something that I've been thinking about and we've been talking about at Bank Director is the role that property and casualty insurance is playing in potentially shielding some of the banks from the climate-related credit risk. And so as California and Florida see insurers leave the market and maybe alter some of the new home purchases and the losses on those, that will be something that we're pretty interested in. I also think long-term, the update of flood maps around the country. I know that Tennessee has had floods that are severe enough that you'd only have them like once in a century flood. We've had them more than once in a century, so that map's got to get updated. And flood damage will be really interesting to see how, because I think most property doesn't actually have flood insurance coverage, and so I think those types of climate disasters will have different types of financial impacts on the bank. The other thing I wanted to say is that innovation is a really big focus for banks. I think that banking that has been branch-based has been really successful for years, but as the digitization post-financial crisis happened, consumers, our phones were getting smarter and banks were really focused on compliance and maybe weren't able to add innovation as quickly as Amazon has been. The core vendors are a big impediment for that. So now think about, many community banks are wondering, well, if we have digital retail account opening, what's kind of the next thing we need to add? And I think that for many community banks, they really need to figure out what kind of bank are they? What kind of customers do they really excel at selling or servicing? And then what kind of technology do those customers need to have? And then how are we going to find it? Is it going to be with our core? If it's not going to be with our core, where can we find it? And what kind of workaround, what kind of backdoors do we need to be building inside of our bank's technology stack in order to service those customers? And also, what's the ROI? Because we can't be doing these projects that take years to build, millions, right, are going to cut into our earnings, and then to have the project fail.
Right.
And also, is it going to be relevant in 2 years?
Yeah. Well, then, let's play off that a little bit. Brenda, where are you on the technology front? Do you feel you need to be somewhere where you're not, or do you feel like being more technologically adoptive makes you a different bank altogether?
It's a question we struggle with every day. And so to your point, your customers are demanding, we have a wide demographic. So we've got those that maybe don't have computers, some that are not very tech savvy at all, and some that want to be they don't want to ever walk in your bank. So we have a wide range, and we know we have to keep conversations going in all of those venues, because as time goes forward, if we want to remain relevant, we have to pay attention to that, because your customers that are already so tech savvy that they don't want to come in your bank, you want to retain them, because what will we look like in 10 years down the road, even 5 years down the road?
Yeah.
So technology is very expensive, to your point, but you have to be able to meet your customer where they are. And so we're always looking to the future. So we do have quite a bit of technology, and we will have, an online account opening coming. But we also have Zelle that we've been monitoring. And right now, the activity in Zelle is not as robust as we expected. It's very interesting. And so we can see that dollars are flowing into our bank from Venmo. But the Zelle transactions are not where we expected them to be by now.
Do you like having Venmo? So Venmo is, I know that for everyone else, these are the same things, Zelle and Venmo are the same, but for a bank they're not, right? So Venmo is this third party, Zelle is a bank-owned product. Which would you prefer to have payments coming into the bank? And is there is it cost that you would prefer? Is there a cost difference? Is there a security difference?
Deposits in the bank right now, we'll take them.
Okay.
And so I would rather have Zelle,
Okay.
because it's a bank product.
Sure.
And as I've tried to educate my children, use that. But they love Venmo because everybody does it, and it's the ease of it. So hopefully over the next several years, we can see a shift to more bank-owned products. That would make me feel better.
Right.
But it is a challenge. And so we do have a very active technology committee, and we're constantly talking about what does our future look like. And so I think we have to be able to be ready to pivot when we need to. But we can't forget about the people that really don't utilize technology, and they're a very important part of our customer base. But that will change over the next several years.
Leave no customer behind, I guess.
Right.
Skip, how about you? I'm sure yours was a different bank 10 years ago. Will it be a different bank 10 years from now?
I don't think it was a different bank. Even when I got there in 2001, it at that time had a very strong retail distribution network, strong household penetration in all of our core markets. In our core markets, we have 40%, 40%, 50%, and 70% of all the people in those markets bank with us. I think that's powerful. We've continued to grow that. We live in markets that the population isn't growing, but our customer count is growing. So we're taking share from big banks who no longer care much about, I know, Jeff, you think I'm a big bank, but the Chases and the Truists, who are in big urban markets and reasonably would say those are the better opportunities for us. And so we feel like they maybe underinvest in our marketplaces. And then the smallest community banks, who I think are challenged by your question, the technology of having, of keeping up, because the customers are very clear when surveyed that they value two things. They value the relationship they have with their banker, and by relationship, what they value is advice, information, knowledge, and help. It's not friendliness. Friendliness is required. It's service and helpful advice. And then they value technology. And every year the surveys say that the customers are more and more weighted on that technology. The surveys also tell us that customers pick a bank based on the branch. So in those markets I mentioned, our core markets, we have more branches than anyone. That's why they're coming from there to us. The branch distribution still matters.
They want to see you there.
The customers no longer need to come in as often because the technology they have in their pocket will do many, many great things, but they still value that location. So I don't see banking for us changing much. When I got into banking in the late 80s, I was told that branches were going to go away and technology was going to supplant everything. We haven't closed a branch in a very long time. We've
But
moved
you're
a
probably
few.
not opening as many, right?
We have opened branches,
Okay.
though. We're not opening as many,
Yeah.
But we already have more than
You have a lot of
anybody, so I'm not sure what else we need to do. So we've always just been a quick follower of the big banks and their technology. So like right now we're working on putting chips in debit cards. I don't use a debit card, I only use a credit card, but I've started using my chip. So I can see how debit card users are going to, so we're trying to, and I think if we are able to keep up with what the largest banks are doing, and they are very good at that sort of thing. I think that the future won't be much different than the past.
Okay.
But that stuff is
Yeah.
expensive.
I did want to point out that something that you've touched on is you have a lot of scale in your market, and not just so all things aside about the branches or whatever. In your markets, you have scale, and I think that really helps you when you make choices about where to invest. Whereas I think some banks, when Chase leaves the market, what they're indicating is they don't have enough scale that is making that market, competitive for them. And so I'm wondering, that's just an advantage you have, that you have scale. And so when you guys, do you feel like you have scale in your market, and what is the quickest way to get scale, the best risk-adjusted return way to gain scale? It's not just growth by assets, it's meaningful penetration in a market, right?
Right. And I would say in our headquarters in Minot, where I'm located, we do have scale. We've been there since 1964. Some of our newer markets, we're working on that because we want to be that true community bank that is not just transaction-based,
Right.
but relationship-based.
Yeah.
And so, yeah.
Right. And Andy, yours is a bank where if not for your bank, there wouldn't be a bank. All this talk of technology and scale and all of this, you probably doesn't concern you, or does it?
Well, of course, going forward, technology is important and technology is expensive, and we've come a long way since I've been there. A lot of it by being forced to adopt technology. But it's amazing, even in our poor areas, most of the people have an iPhone.
Yeah.
You see them walking down the street with an iPhone. And so even though we're tremendously relationship banking, they use their iPhones to conduct business. It's still amazing how many phone calls we get or how much our telephone banking is used, because we thought that was going out a long time ago, but it hasn't. But technology is important to us, but we operate on such thin margins. One bad decision in technology could run our bank.
Wow.
So we have to be very careful in what we do.
What was discussed earlier today at this conference was about this continued slow glide path of consolidation and the loss of community banks in certain communities, and what does the future hold. Kia, you and your editorial team at Bank Director have written extensively about the uncertainty facing banks and where growth is going to come from. But I was really interested in a piece that you all wrote about size doesn't determine success. Tell us a little bit.
Yeah, so there's no right size in banking, although there are certain asset thresholds where it's easier to operate under them, and there are implications about going over them. There is no right size for a bank, but I think the issue is that most banks feel like they need to be bigger, because when you are bigger, you can just make more money off of all of your assets, right? If you have more loans, you'll make more money off of those loans. Something I think is being really is really interesting, and I think we're seeing it now with some of the bond portfolio and how that impacts earnings, is you actually want to make sure you're getting really good risk-adjusted returns, you're making profitable growth. And so I have long studied how the $10 billion asset threshold that was put in place by the Durbin Amendment. So there isn't like a threshold, but there is a consequence for from a revenue basis of going over on your debit interchange, how that has really altered how community bank profitability changes and changes the incentives. And so we see when community banks go over 10 billion, they tend to de-emphasize retail deposits because they're losing that interchange from the debit cards. And so you'll see maybe a growth in business lines like commercial and industrial lending and commercial real estate. You will also see these banks buy another bank because they will actually, again, going back to scale, they need to grow their assets so that they can make up the lost interchange revenue. And that's a really powerful shift. And so while I don't think size doesn't determine success. You can have really good returns, like at Skips Bank at 6 billion. You can have really good returns if you're the Bancorp and you're stuck under 10 billion because of your innovative business model. Or you can be, we have some $50 billion banks that are really, really good operators at 50 billion. But I think those are unusual, and at most banks, they are kind of getting like their risk-adjusted return around 11%, which is their capital level, and you'd want to see for banks like 13%. You want them to be making more money than their capital.
Right.
So it is unusual, and you do have to be a really, really good operator, but it doesn't mean that good bank operators are only at big banks or are only at small banks.
Well, we saw what happened to some
Right.
pretty big banks early this year. Skip, for you, is success in the future mean being bigger?
We've grown through acquisition, I think, 7 times since 2005. Our stock trades for 3 times book value. So if somebody is for sale, I usually hear about it. Because we can pay more than anybody else. We talk to a lot of people and we walk away from a lot of things because I have been at a big bank. I didn't like some things about that bank. I've been at a much smaller bank. I liked some things about it a whole lot better. I don't think bigger's better. And we say that routinely. I think better's better.
But we will
only grow through acquisition when we can find somebody where there is a partnership that is better. So we're not focused on how do we get paid.
Well, would you look at any of these thresholds that Kia mentioned?
He's got a $10 billion threshold he's staring at.
The $10 billion, I'm at 6. So
Yeah.
we're $2.5 billion in 2005. We're 6 now. So I won't live long enough to get to 10.
Well, Brenda, how about you? Do you feel like you're in a good place in terms of size, or do you feel like you have an open mind about what the future may bring in terms of bank size?
And I guess I probably didn't share this, but we're a $2.1 billion bank, and I think we're in a good place. We're open to more if it makes sense, but we're going to be cautious and conservative.
Well, nobody has ever accused your bank, Andy, of being too big to fail.
No.
So where are you on the footprint of your bank?
Sure. Right now, we're actually over 200 million, but that's because of the influx of deposits related to public deposits from our tornado disaster. But normally, we're around 190. Just a couple of years ago, we were 157 million. So we've shown some small growth, but we discuss at our board meetings every year, do we want to move outside of our 2 counties? Do we want to maybe start out with an LPO somewhere or put another branch in, because it's not extremely profitable just being in 2 counties in such a poor area. But we're not family held. Our shareholders are widely held, but they all originate from our counties. And so our board, they're forward-looking board, but they're want to help us or follow our shareholders' directives in that they want to support our 2 counties.
Yeah.
And so the only way we can really grow is to move outside our counties, and our board doesn't want to do that right now. And so we will stay about where we are.
But
And
success to you in the future sounds like being there for your county.
Exactly. We were, from 2017 through 2021, our bank originated over $477 million in loans, and 94% of that was in persistent poverty counties. If we weren't there and we had a larger, much larger institution that had a home base a long ways away, they would make some loans, but they wouldn't make $477 million worth over 4 years.
Right.
So success for us is to stay here, remain independent. We've had several opportunities to sell over the last few years. We've had 3 opportunities in just the last few years, but thankfully we've remained independent.
Well, I know that in the next 15 minutes, let's go around and talk about, we're talking about future success, what success may look like for your bank. What will your bank look like in 10 years? If you continue on the path that you and your others have worked out.
Sure. Success, again, for us is we will still have 2 counties making money, being viable. We'll still be functioning in those 2 counties. We'll still be independent. We'll be mission-minded. We're a mission-minded bank. But to be mission-minded, you have to have a profit to be mission-minded, so we still have to be making a profit. And I will be retired in 10 years, so I hope that the people that come after me will continue, our culture there.
Do you have a succession plan for you?
I do. We have a definite succession plan, and we're working on forwarding our values so that they understand that. And so many of our employees are new to the bank due to retirements. I've hired 22 of 31 employees over the last 5 years, mainly due to retirement. So I've got to enable that culture going forward. I've told this story several times. Some of y'all have heard this before, but I grew up relatively poor, and my mother and our house got foreclosed on when I was young. We had to move into my grandmother's house, and the bank that foreclosed on us was Bank of Anguilla, and now I'm running that bank. So, it's the mission. I understand what people go through when they're on the other side of not having money and struggling. And so I try and push that out to all of my employees that, look at each person and see what they're going through and see how we can help.
Right.
And that's success to me. And hopefully we'll still be doing that in 10 years.
Okay. Brenda, how about you if you look out 10 years?
Yeah, it's interesting because when I started at this bank 42 years ago, there was no technology. And so I had the first Radio Shack computer in the bank, and then I moved to a PC. And so I have seen that change in, I would say, a relatively quick period of time. So when I think 10 years down the road, I am interested to see where we'll be at. And I do venture to say there will be more technology. But I still, as long as I'm with the organization, want to encourage, let's make sure we're taking care of those that need to be taken care of, that maybe don't have the technology, because they are a very important part of our community and of our customer base. But I need to encourage that we're moving forward to be able to be ready to help the customer of the future. Mm-hmm. And so I'm anxious to see what the next 10 years bring, because from where I was to where we are today to where we'll be in 10 years is just very interesting.
Yeah, you mentioned, you look back 10 years and you think that that's a long time ago, but it really was just a blink of an eye. And Skip, 10 years from now is going to be another blink. And whether you're at the bank or not, City National, where's that bank going to be 10 years from now?
Well, I expect I won't be there in 10 years. Probably the leadership will change a lot, and often that happens at a lot of banks. I think the bank will probably have grown into some new markets. I hope that in each of those markets we have more customers than we do today. And I hope that this is a community banking conference, still looks like a community banking in the way I think of a community bank. I was at a conference with a CEO of a bank about twice our size a couple weeks ago, and he said, I don't even know the lenders anymore. And I thought, well, that, to my definition of community banking, is people know each other. And in rural Appalachia, the joy at Citi is people don't move around much. So we do all know each other. I know all the lenders, all the trust people, all the mortgage originators, all the leaders in operations and retail, anybody who supervises, most of the branch managers. I hope that Citi is that community bank that still knows each other. That's what I know our employees value, is they feel like family. And when I was at the big bank that I was at, it didn't feel like family. It was a great place to work, but it did not feel like family.
Kia Bank Director, does it forecast out 10 years
Oh my
based
God.
upon any surveys?
I wouldn't want to do that if someone does it. I should have said that the views that I'm going to say are my own opinions. They're not the opinion of Bank Director, and I guess if I'm going to make a forecast, I definitely need to say that. So, like, if you can tell by my title, Technologies, I'm really focused on how technology is changing banking. What we know about banks, almost complete lack of de novo formation. So if every single bank in 10 years gets bigger, what we're going to have is fewer banks that are bigger, period. That's just kind of where the economy or the environment is going, because we do not have new banks forming. So then we have any consolidation means that the pool is just getting smaller. Now maybe you think 4,000 banks is too many banks, but we've never had fewer than 4,200 banks. We've never had fewer banks than we currently have. And every single one of these banks, even if they just grow organically, is just going to get bigger. So I am actually really interested in how meaningful the $10 million asset threshold Governor Bowman asked us yesterday to consider whether that is a reasonable threshold, and maybe we should even start getting away from asset-based thresholds to think about community banks and think instead about business models. What does it look like to have a community bank business model? How many layers of organization and complexity are in there? What is the primary method of delivery of services? What are the accounts looking like? And I think, the spring banking stress really showed that different customers will behave differently, different sizes of deposits behave differently. The other thing too is if we have the natural extrapolation of technology, all of these banks should be able to compete nationally for a certain type of customer. Or all of your customers, if they leave your home area, should be able to remain one of your customers. So I am actually really interested to see how technology allows community banks to keep their customers when they go to college, when they open, when they get married, when they move to big cities. Felt like a time traditionally where community banks would lose customers because it was so geographically based. And so I think, technology is a cost and it's a risk, but I think there's also an opportunity to kind of deepen and continue these customer relationships. And I'd actually like to see, members of my generation or maybe even younger than me to see banking as a value. Or staying with their community banks as a value. And then the other thing that I think about is the role of non-banks, which I know was a theme in previous events. If you think about, we were talking about Venmo versus Zelle, right? Like that's a non-bank versus a bank. When we think about the role that Square plays, Square technically has an industrial loan company charter, but Square has made major inroads into small bank payment acceptance. And I don't know if Square customers care that it's not a bank. Square also owns Cash App. I don't know if those people care that it's not a bank. And so I think one thing we should be thinking about as an industry is how do we tell people what the value of being in the regulated financial services space, not in the non-bank financial services space, and how can banks compete for that or explain the value of that to their customers. So in 10 years, I think that's going to be, if community banks aren't feeling the heat about Square right now or Stripe and all these payment acceptance, especially for small business payments, I do think that that's going to be an area of pretty big competition going forward.
There was a Gallup poll after the stress of earlier this year that showed a lot of people were worried about where they put their money. Whether it was in a bank or in a non-bank, they were worried, and it suggested that there was maybe a lack of awareness or an appreciation of the whole role of deposit insurance. Thank you for for bringing an FDIC brochure. Anybody want one of these to educate yourself just a little bit more about FDIC deposit insurance? But again, our phones were ringing off the hook, and it does suggest that there may be some market confusion about where people are actually putting their money these days. I love the idea of using technology so that when people move away from their hometown, they can bring a little of their hometown with them.
Yeah.
You know, and that wouldn't that be great if they went off to great things and still had an account at Bank of Anguilla?
Yep.
You know. Well, any final thoughts? And we'll start with you, Andy, about our theme today about how community banks like yours are preparing for future success.
Well, as I said yesterday, we need community banks, and community banks are vital to every part of the nation. It's not just the Delta and Mississippi. And the banks, our board of directors, we need to be sure and position ourselves, no matter what our model is, and mine's different than these two, but we have to do what it takes to stay vibrant and stay alive, because the number of banks, as we all know, are decreasing. And it is important that we stay there.
Okay. Brenda?
I think, Brian, the same thing. We need to continue to have a lot of community banks throughout the country, but we do have to educate our customers, because to your point, you know, the Squares, the Venmos, people really associate that with being insured money.
They think it's a bank.
They think it's a bank. And so we do have to do a better job of educating. We have to continue to listen to our employees, our customers, and you know, we do tend to have a lot of committees at our bank, but it's because we want to hear boots on the ground, what's happening, what are customers asking for, what are employees thinking. We can't do everything, but if we don't know what they're looking for, we can't also research it to make sure and see if it makes sense for us to offer. So really being open and listening to your customer base and looking to the future and making sure we remain relevant.
Okay. Skip, final thoughts?
As a bank in Appalachia, I'm going to have to take off my banker hat and put on my economist hat and agree with Andy and Jeff and others that we need to be worried about rural, small-town markets and a lack or disappearance of community banks from those markets. It's a real threat. It's hard, expensive to operate banks that are small, and particularly in those kinds of markets. And Jeff had some really, I thought, good thoughts about how we might try to protect those markets.
Right. Kia?
There has never been fewer banks in the country, and they have never faced more competition. It is coming from all sides. It is coming for their cheap deposits. It is coming for their loans. It is coming for their customers. And so the impetus for regulators and for community banks and their boards is how will they respond to competition? Where will they find growth? Where will they be able to create meaningful relationships that are profitable and enduring? And then, you know, how will they manage these kind of acute competitive concerns? How will they find strategic growth and gain scale and also get the deal approved by the regulators in a timely manner? And then how will they manage some of these demographic changes, the generational changes that they're looking at both internally, you know, from a talent perspective and then also from a market customer perspective? And that's what I'm going to write about, you know,
That's
going
right,
forward.
and we'll continue
I'll write some
to
articles
read
about
all
that.
about it. Well, I'd like to thank our panel today for joining us. It has been a really wonderful conversation. Andy Anderson of Bank of Anguilla, Brenda Foster of First Western Bank and Trust, Skip Hagebeck of City National, and of course, Kia Haslett of Bank Director. I'm Brian Sullivan with the FDIC, and thank you.